clearly on all fronts, numbers across parameters have actually beat street estimates. Uh, is this kind of performance expected to continue in the coming quarters as well? Because I ask you this question is because this is a business absolutely related to the kind of cycles that we see on the commodity side.
So I always give, the performance of a company is based on how its operations run, how efficient their cost of production is, how good your product mix is. And in Hindalco, we are adding more and more value-added products. So all I can assure you is that on all of the things that we control, which is our operations, our cost of production, our value additions and quality of products, that is completely sustainable and actually will get better every quarter.
Right. Satish, when you mention about the increase in terms of value-added products that could be coming in terms of Hindalco, uh, if you could help us understand in terms of strategy, what percentage of revenues will come in from value-added products and how margin accretive is that expected to be and what are the kind of timelines you're working with?
So, when we did our analyst show in early April, we actually gave a very clear guidance that we are going to make our downstream EBITDA 4x. So, roughly from around the 1,000 crore, we are going to take it to 4,000 crores. Now, if you look at it this year, 160,000 ton roll plant is coming up and is commissioning in Odisha. An extrusion plant in Silvassa was commissioned last year and is going to ramp up. A copper inner groove tubes for air conditioners is commissioning in Baroda. An AC fin plant is commissioning in Taloja outside of Bombay. So we are adding nearly 200, 250 KT of value-added products into our mix over the coming quarters. So I think this is where the additional benefits and the additional EBITDA is going to accrue to Hindalco over our upstream margins.
Okay. And along with this, in terms of where the copper business is concerned, we did see a marginal decline that did come in terms of the copper EBITDA. And this is despite the kind of higher shipments as well as, revenues that we saw. From here on, what's the outlook looking like in terms of FY26?
Yeah, so as you rightfully said, TCRCs, which is the conversion and refining margins that are given to custom smelters like us, has come down quite a lot. So I think that this year we are guiding that the copper business will do about 600 crores a quarter. And what is helping us is that the copper value chain is very diverse. So sulfuric acid prices are good. And we are doing quite a lot of value additions on top of copper cathodes. So copper wires, copper tubes that I just mentioned, copper alloys for the railways. So we have a wide range of downstream products on copper that we are releasing to the market. And hence, even with low TCRCs, we are quite confident that we'll have a 600 crore per quarter EBITDA for the copper business.
Okay. And in regards to Novelis as well, the performance was pretty strong because the shipment volumes have seen a growth on a sequential basis, though remained flat on a year-on-year basis. However, which are the segments that are driving Novelis and where are you seeing the pressure, which could probably be a risk?
So if you look at the tailwinds, what is the tailwinds of for Novelis today is the can demand is extremely strong. We are actually completely sold out. The second thing is the scrap spreads that had tightened in Q2, Q3 have started to ease off. And in fact, we are starting to see scrap spreads improve. So these are two important tailwinds for Novelis. If I look at the headwinds, the auto demand in Europe has been a bit weak with the economy there being a bit weak and also because of the tariffs situation with the US. And the other important headwind for us, which we are hoping will get resolved very quickly, is the Canada-US trade agreement, because we have a plant in Canada that supplies to the US, which is a sort of a headwind today because of the 25% tariffs, but which we are hoping will get sorted out when the USMCA 2.0 gets signed.
Okay. And any impact that you're seeing currently with regards to where the tariffs are concerned?
As I said, in the India business, we don't see any impact. The only thing I just mentioned was the US-Canada for Novelis.
Okay. And what will be the quantum? That's what I meant to ask.
So we have already been on record saying the quantum could be in the order of about 40 million.
Okay. Apart from that, overall, if you have to look at the coal mix for 25, Even 26, you've mentioned, will remain similar to 25, but things will only change post commissioning of Chakla as well as the Bandha mines. What's the timeline for this, and how does this impact in terms of finances?
See, the our opening of our coal mines is very important in the sense that it gives you for the next 20-25 years a steady cost of production. Because even though coal prices this last year have been very favorable, but we are still exposed to what could happen in the market when we go in for auctions, linkage, or spot.